Hey guys, Glen Griffiths here, and just wanted to have a quick chat with you guys. Now, it's Friday afternoon. I'm in my office, and wanted to make sure that I formulate some thoughts and get some information out there to my clients and others. If everything you thought you knew about money was wrong, when would you want to find out? Would you want to find out sooner, later, never? What if there was a tool that you could make deposits into that would have guaranteed growth, that would have continual growth, that is guaranteed to never have a negative day? So it's going to grow every single day in accessible cash. The value of it is going to grow, and the pricing cannot increase once it starts. You would have some control over putting more in, but no one can come to you and say, you know what, things are a little rougher than we thought, so you're going to have to pay more into this. You have predictable deposits, predictable cash flow, and oh, by the way, fairly flexible deposits. Now imagine this, okay? You're making deposits into an asset. You're increasing your equity every day. You're increasing your equity with each deposit you make, and you have access to that equity without a credit check, without an actual application. Here's the application. The application is, where do you want and how much do you want? You know exactly what's available to you at all times. It doesn't matter what your debt ratio is. It doesn't matter what your credit bureau says as far as a score goes. You have access to these funds. It's contractually guaranteed. Now, if anything, 2020, so far in 2021 has taught us is life is unpredictable. So what if we have another COVID? What if we got to shut down and income is tight and the monies that plan to be deposited are not available? Do you lose this asset? Well, if it's set up properly, you shouldn't. And I'll give you an example because I find that a lot of my clients get the analogy of a house and the mortgage. So let's say you buy a rental property, right? You know, at least for the next 5 years, if you're in a locked-in mortgage, so to speak, you know what your payments are. You know what your premiums are, right? Let's use the analogy of maybe doing a line of credit where there's a minimum and maybe your minimum is 1,500 and you can put 2,500 a month. You elect to put the extra 1,000. Now, here's the beauty of it. You can put that 2,500 a month in and things are going well. And a COVID hits and you go, oh my God, I can't do that. Maybe I'll just drop down to my needed 1,500. You would also have that option. However, with a mortgage, you don't generally have the option to not pay at all. Now, what if you've been doing this for a couple of years and COVID or something worse, we hope not, or something similar hits, or your circumstances have just gotten in a way that things are really, really tight for an extended period of time? Now, if you were putting money in this asset and it was set up properly, this asset could fund itself for even up to a year, let's say, if you've been doing this for a few years. Think about that. What mortgage do you know of that you could be paying a few years in, you miss up to a year in payments because funds are just so tight and you get to keep that house? Well, not only do you get to keep this asset, it is contractually guaranteed. You see, you're not going to lose it because of a default of not having payments. It's contractually guaranteed that they will use the equity that was built up to keep it going. Flexibility. You can have access to the cash value that builds up in there. So again, the equity. The equity that's built up, you can have access. Now, if you've ever tried to tap the equity in a house, you know as much equity as you may have, there's an application process. You're still going to have to do some sort of qualification, right? You're going to have to provide pay stubs more than likely. You're going to have to get your credit pulled, and if anything's a little sketchy there, that could really affect it. If you're self-employed and according to your accountant, you should write your income down, and your income's been low for a few years, and you don't quite meet the new debt ratio standards, you may not get what you want or any access to those funds. Well, here's the beauty of this. None of that counts. None of that counts. Not only do you know what your equity is, you know exactly how much you have access to. And here's the beauty. Nobody is going to tell you no. You don't have a lengthy application process. You've got one form. Actually, it'll be 2 pages. And the second page really asks, do you want to make a scheduled repayment, which you don't have to? And where do you want the funds deposited? Direct deposit or a check sent to you? That's it. So for an asset that will continually build equity, can never go negative because markets are not going to affect it. You can have access to your equity at any time. If you can't make premiums or payments or deposits for an extended period of time, you have a contractual right to not default, but to have the equity in the asset, take care of the asset until such time as you can get started again. Or depending on how long you leave it, I mean, nothing like that would go forever. You could have the equity run out, but it would be a lot longer than if you'd had money in a mortgage. Nobody's gonna foreclose on you. As long as you've got cash in there, this thing will get taken care of itself. And here's the beauty. When things improve, you can catch up on those deposits at your choice and speed. I said that, your choice and speed. Nobody's gonna say you've got to do this minimum. This is how much you got to pay lump sum. You've only got this amount of time. Total flexibility and control. The banking functions of loan officer are yours. The rule maker, the owner of the bank is you. You get to have those choices. And as you put money back into the system and it keeps building up more equity, if emergencies happen, or even better, opportunities come knocking, then you don't have to wait a week, 3, well, let's put it this way. If you've ever tried to tap the equity in your house again, you know it's not a quick process. So you don't have a lengthy multi-week or sometimes, depending on the paperwork, multi-month process. You can get access to your funds in about a week. How fantastic is that? And again, you choose how much you want to take out up to that limit. You choose your payment. You choose when and how much goes back in there. And you are contractually guaranteed to have that continue to grow because you use other people's money instead of taking your own out and interrupting your flow of compound interest. For more information, let's have a chat. Glen Griffiths, have yourself a great day. Thank you.